stream. So you see here that now we are live. Everything is ready to go.
Hello guys, can you hear me? Guys, if you can hear me, drop a like, okay? Hello guys, can you hear me? Like, okay. Hello. Hello. Okay, so for the I saw someone asking how much the private mentorship costs. For the private mentorship, for group mentorship, it costs $100. For one-on-one, it costs $500. Okay. So for those who are interested in the private mentorship, you can text me so you come and enroll and then. Mind you, for the free mentorship, I'm only teaching you one strategy, which is support and resistance. That's all I'm teaching you for the free mentorship. I'm just teaching you support and resistance. You can go and watch my videos I've uploaded on TikTok and other places so that you can learn the SMC stuff for yourself. For the private mentorship, that's what I'm teaching SMC. Okay, so for today's session, it's like my screen is stagnant. Hold on. Uh, okay, so let's start with today's session. Let's just start with today's session. So today we are going to learn about support and resistance, guys. We're going to learn about support and resistance. For our first session, we talked about what Forex is. We talked about basically what Forex is made up of. For those who haven't watched it, you just head on to the playlist side. You head on to the playlist, my YouTube playlist. You are going to find it over there. Let me show you guys how to um, go forward with that. Okay, so go to my channel. Yeah, so when you go to playlists, you see free mentorship over there. You guys, that's so once you come to free mentorship, you can see we have day one, day two, day three. So we are now doing our day three. So day one, we talked about what Forex is. Day two, we talked about trading view. And day three, we talked about MetaTrader 5. So right now, what we are dealing with, we are talking about the reactive zones we have. So we have, let me take that through. For those who weren't here from the beginning, let me take you through. So we have um, when I talk about reactive zones, I'm talking about basically any zone in the market that price reacts from. Do you understand? We have a lot of zones that price reacts from. We have support and resistance zones, support and resistance. We have supply and demand, and then we have supply and demand, and then we have other blocks, order and breaker blocks. Okay, order and breaker blocks. So these are basically the reactive zones I use when I'm trading: support and resistance, supply and demand, and order and breaker blocks. Okay, order and breaker blocks. So let me write them again. Yeah, so these are the reactive zones I use when I'm trading Forex. These are the reactive zones I use when I'm trading Forex. So for those of you in the free mentorship, this is what I'm going to teach you. I'm basically I'm basically going to teach you this: support and resistance. This is the only thing I'm teaching you guys. For the free mentorship, support and resistance is the only thing I'm teaching you. And then for the private mentorship, we've already done support and resistance. We've done supply and demand. Today we did order blocks and breaker blocks. Today is the beginning of order blocks and breaker blocks. So yeah, we've begun this topic. Okay, we've done support and resistance, we've done supply and demand. We are on this. So for the free mentorship, so let me clean this. This is what we are talking about: support and resistance. This is what you need. Okay, so basically, support and resistance are two reactive zones in the market that the market tends to move to the upside or to the downside anytime price touches them. Do you understand? So we have the support being the zone that pushes market to the upside, upside movements, and then we have the resistance giving the downside movements. Okay, okay, very good. So this is how you basically find your support and resistance. You need to find a high and a low in the market. You need to find a high and a low in the market. Guys, how is the network? How is the network? If the network is bad, you can just let me know and I'll do something about it. Is the network okay for everybody? Okay. So let's continue. So you need to find a high and a low in the market. You mark out your low as your support, and then you mark out your high as your resistance. Do you understand? Resistance is always at the top, support is always at the down. Do you understand? Let me write that down. Resistance at the top and support at the down. Support. Okay, very good. Yeah, so basically this is it. So when you mark out your high and your low in the market, what you basically look out for is price to react off of your resistance or your support. Do you understand? So anytime price touches your support, you have to expect upside movement. Anytime price touches your support, you expect upside movement. Anytime price touches your resistance, you expect what we call downside movement. Do you understand? So this whole reactions over here, when price touches your support going up, price touches your resistance going down, we call that the direct reaction. Do you understand? We have two types of reactions in the market. We have the direct and indirect reaction. For those who have watched my YouTube video, I made a YouTube video on this. If you've watched it, you understand what I'm talking about. So the direct reaction we have is when price touches our support and goes up instantly, price touches our resistance and comes down instantly. This is what we call the direct reaction. And for the indirect reaction, we have price breaking the zone. So when you have price breaking your zone, instead of price touching and coming down, you have price breaking the zone, coming back to the zone to give it a retest, and then pushing to the upside. Do you understand? You have price breaking the zone, coming back to retest the zone and pushing it to the downside. Okay. Someone said the screen is half. me see. I've pulled it to the side a bit. Let me see whether it's going to come over here. Yeah, so this is basically it. This is the direct and the indirect reaction. We have the direct reaction when price touches your support and goes up directly, price touches your resistance and comes down, comes down. Do you understand? But when price breaks your resistance and comes back to retest it, that's what we call the indirect reaction. So the indirect reaction is also known as what we call the break and retest. That's the indirect reaction. The indirect reaction is also known as the break and retest. Okay, also known as the break and retest. So this happens a lot in the market. So you can see some traders are there that basically trade break and retest. The only trade, there was a point in time in my trading journey where I was trading just break and retest. I just mark out my support zone, I mark out my resistance zone, and all direct reaction, or I get an indirect reaction, and then I take my trade. So that's basically what I look out for sometimes. So let's go to the chart. Let me give you guys some practical examples. Let me clear this. Let's go to the chart. Let me give you some practical examples of how to locate your support and your resistance and how to spot your direct or your indirect reaction. Okay. So for you to spot an indirect reaction or a direct reaction, that's when candlestick confirmations comes in. Do you understand? So the next time we'll just be using our Google Meet. YouTube Live is very, very slow for me. Okay. So guys, if you have any questions, you can go ahead and ask now before I continue. For those who have any questions, you can go ahead and ask now before I continue the lesson. If you have any questions, go ahead and ask now before I continue the lesson. Okay. So first of all, we are going to look for a reactive zone, right? We are going to look for a high and a low. Okay, we are going to look for a high and a low. Okay, so perfect. Looking at this particular area over here, you can see we have a high over here, and then we have a low over here, guys. We have a high over here, and then we have a low over here. So we have, I told you that after you've marked out your high, you've marked out your low, all you have to do is you mark out your high like this, and then you mark out your low like this. This is your low. Okay, hold on. This should have been how it should be. Your low over here, your high over here. Yes, perfect. So you are going to find your high over here, your low over here. As I said, all you have to do is you need to mark out those two zones and wait for a reaction on them. Do you understand? You can see you have your low over here, your high over here. So then you when price touched your low, what happened? You got a direct reaction. Do you understand? You got a direct reaction. Price went to the upside very nicely. Do you understand? And when price broke your resistance, this is an indirect reaction. You can see instead of price coming down, what happened? Price broke your resistance and gave a retest over here. And what happened? You can see price pushed to the upside. Very, very simple. The direct reaction played out over here on the support, and the indirect reaction played out on your resistance when price broke your resistance, gave a retest, and pushed to the upside. Very, very simple trade. Very, very, very simple trade. Do you guys get that? I think the next time we will have the session on Google Meet. The next time, it's even I'm even down with what I'm teaching now. I'm down with the whole concept. So let's just switch. Let's switch to Google Meet right now, so that we'll continue the session over there. Let's switch to Google Meet. I'm done with the whole concept, so let me switch to Google Meet right now.